Will there soon be an Ethereum Spot ETF? We'll show you the latest developments in the world of crypto. Good day, kings! In this video, we present the latest news about the cryptocurrency Ethereum. If you enjoy the video, don't forget to hit the like button and subscribe to our channel to become an actual king. Trust me, it works. Please note that this video is not financial advice. What exactly is Ethereum? Before we dive into the main content, let's take a brief look at Ethereum. Ethereum was launched in 2015 by Vitalik Buterin, a visionary programmer and developer. Inspired by Bitcoin, Buterin aimed to create a platform that not only serves as a digital currency, but also enables smart contracts and decentralized applications. The Ethereum system uses Ether as its unit. Currently, there are approximately 120 million Ether in circulation, equivalent to a market capitalization of around $440 billion. Besides Bitcoin, Ethereum is the second largest player in the crypto market. Since Bitcoin is considered the first cryptocurrency on the market, all other cryptocurrencies are often referred to as altcoins, with alt standing for alternative. A key component of Ethereum is smart contracts. These are self-executing contracts based on the Ethereum blockchain and are automatically executed once a certain Ether value, specified in the contract, is transferred. They enable digital contract execution without the need for a third party. Each transaction is then recorded on the entire blockchain. In September 2022, Ethereum underwent a transition from proof of work to proof of stake. Blockchains require an internal mechanism to determine and verify which participant should have permission to generate new blocks and add them to the blockchain. With proof of work, this is done through computational power. You've probably heard of Bitcoin mining. With proof of stake, it's about block ownership. Users stake blocks they own, a process called staking. Based on the number of staked blocks, a random user is then selected to add new blocks to the blockchain. Proof of stake has lower energy consumption and better scalability than proof of work. What is a spot ETF? An ETF, or exchange traded fund, is a tradable fund that tracks a specific index. An example would be the S&P 500, which includes the 500 largest publicly traded companies in the US. There are various sampling methods. Replication involves buying the index one-to-one. Alternatively, the index can be replicated through swaps or contracts. A spot ETF directly invests in the underlying asset. A Bitcoin spot ETF, for instance, invests directly in Bitcoin, and this ETF can then be traded on the exchange. On January 10th of this year, the first Bitcoin spot ETF was approved by the US Securities and Exchange Commission, or SEC, which boosted its value. Overall, 11 investment vehicles received approval. But why is this so important? The traditional financial market, institutional investors, family offices and pension funds can now invest in Bitcoin, which was often not possible due to regulatory reasons. The new financial product aims to provide traditional investors with access to cryptocurrencies through exchange-traded shares. Previously, cryptocurrencies could only be bought on non-regulated to lightly regulated crypto exchanges with so-called wallets. Bitcoin spot ETF inflows amounted to a whopping $418 million on March 26, 2024. At the end of February, Bitcoin surpassed $60,000 for the first time in over 2 years. And what about the Ethereum Spot ETF? Ethereum is expected to follow Bitcoin's lead. However, disillusionment has set in over the past few weeks. The US Securities and Exchange Commission, or SEC, seems to be putting a damper on the project. Some members of the US Congress have asked the SEC for answers regarding the security status of Ethereum. The SEC must now decide whether Ether should be classified as a security or a commodity. If Ether is classified as a security, it would fall under the jurisdiction of the SEC. The Commodity Futures Trading Commission, or CFTC, has referred to cryptocurrencies as commodities, which is why there is already an Ethereum Futures ETF in the US. If the SEC were to classify Ethereum as a security, all investors trading the Ethereum Futures ETF would theoretically have traded in illegal securities. The difference between the spot and futures ETF lies in the fact that the futures ETF does not reflect the real price, but instead invests in futures contracts. These contracts agree to trade at a predefined price at a certain point in the future. With a spot ETF, as described earlier, you are actually investing in, for example, Bitcoin, and the value of the ETF is directly tied to the real-time price of Bitcoin. By the way, in most European countries, it's prohibited for ETFs to track only one product, as risk must be diversified. Existing products thus invest in futures, options or shares of companies connected to the crypto industry. The possibly impending Ethereum Spot ETF has recently propelled its price upward. After a brief correction due to the Jong-Un update, the upward trend seems to be continuing. The decision on the ETF's approval will be made by the final deadline on May 23rd, so we'll have to be patient. Also, with the upcoming US election in mind, the decision on approving an Ethereum Spot ETF will be exciting. Do you hold either? What are your thoughts on the approval of an Ethereum ETF? Let us know in the comments. Thank you for watching our video. If you enjoyed it, don't forget to hit the like button and subscribe to our channel to become an actual king. Trust me, it works.